What's happening, everybody? Thanks for tuning back in. This is going to be a pretty comprehensive video. We're going to go over a bunch of things. We're going to talk a little bit about the crypto markets, the news, what's happening this week in New York. And then I'm going to just touch on my new PT feeder settings, kind of how I implemented a couple new strategies. And I'm going to talk a little bit about the stop loss stuff, because that's been a hot topic in my Discord. So if you're not in the Discord group yet, I recommend jumping in there because we're all just kind of sharing our thoughts on how we can really hone in these settings in Profit Trailer. I'm going to talk a little bit how I structure my DCA logs or my DCA buying levels and sort of my Profit Trailer just portfolio in general, how I like to set it up, how much balance I like to keep and whatnot. So that is cool. We're talking a lot about that in the Discord, and among other things, we're talking about coins, kind of how we're playing the markets at any given point. So definitely check out the link in the description for the Discord. It's definitely growing every day, so that's cool to see. Basically, you're seeing a bunch of red right now, and there's been a little bit of FUD regarding different privacy coins, whatever. I'm not too worried at all. This is just kind of a normal pullback that we're seeing. And I talk about this in a lot of videos I make. These present, if you look at the charts and you really kind of understand the buying strategies that you're using, these present really good buying opportunities. So that's something to be aware of. Let's just jump into this. So what's happening in New York this week is the consensus. It's Coindesk's consensus 2018. Basically, this is just a big blockchain expo where a lot of these big blockchain companies and anybody who's anybody shows up to this. And a lot of these blockchain companies will announce new products or new, big news. And so my philosophy and a lot of other philosophies, professional traders' philosophies is, buy the hype and sell the news. And so if there's a bunch of companies saying that they're going to announce some big news at this blockchain expo, it wouldn't be a bad idea. And this isn't financial advice, but it wouldn't be a bad idea to dig a little deeper as to what the news could be. And you can buy the hype on the way up and then, sell the news when the news comes out. And maybe it's not what everyone expected, or maybe it's better and it keeps rising. So, who knows? That's something just to keep your eye on. I know a lot of traders are looking at this, and I actually have a couple friends of mine who are going to this, which is cool. So they'll be updating me on what's happening. I hope to go next year, so that'll be pretty sweet. But yeah, you can go to their website and check this out. Couple bits of news. Circle raised 110 million, plans to create a dollar pegged cryptocurrency. So everybody who's freaking out about Tether, it appears that Goldman Sachs backed GS.N cryptocurrency startup Circle has raised 110 million in a round led by a Chinese virtual coin mining giant, Bitmain Technologies. So a lot of people have heard of Bitmain Technologies in the past. This is pretty big news. I think this is pretty cool. Goldman Sachs is definitely leading the charge of the big banks getting into this blockchain realm. So that's cool to see. You can read this article for yourself, but basically the development is supposed to start over the summer, and USDC will be a dollar pegged and dollar fiat backed cryptocurrency, which, to some people in this, realm may not really like that, but for us using Profit Trailer PT Feeder, it is nice to have a safe and steady coin to be using as your base currency. I think that's something that will definitely help the market, and this is something necessary. Big businesses are going to want to use USDC to help send money faster, all around a step in the right direction when big companies are getting involved in blockchain. Another big company that's getting involved in blockchain, over the past few weeks, we've been hearing a lot of news about Amazon, but they just partnered with another company. It says Consensus. So the cloud mining company Amazon Web Services, a subsidiary of online retail giant Amazon, has partnered with blockchain incubator Consensus to create the two firms' business blockchain cloud service. Kalido, I'm not really sure if I'm pronouncing that right, but basically this is going to be their one-step shop, or it says their easy button to get into blockchain without a lot of background knowledge. So this is going to be really cool. They're going to basically offer, really easy solution for big companies to get into the blockchain business. And this is a really cool business opportunity for Amazon. I think this is really smart. And, I'm definitely keeping an eye on this. kind of see where this goes, but you know, you can read this article for yourself. I just thought this was one of the bigger bits of news that came out today from this blockchain expo. So anyway, we'll just dig right into the settings, and I have a feeling some people will be nice and happy with this, the way this looks. So, basically, I just copied and pasted this into a Word document so everybody can see it better. And I hope you can see this. If you can't see this, then you're probably blind. So, anyway, so I get a lot of questions about the excluded coins. There are some coins in here that I'm currently holding, deep bags of, and I'm using that bag strategy to get out of these deep bags. I'm breaking them up, and I have videos about that as well on my channel that you can kind of get an idea of. And we also talk about that strategy a little bit in my Discord channel. So if you want to get a better idea of how to get out of pretty deep bags, I recommend checking those videos out. Same with the sell only mode coins. There are a few in here that I'm holding. Feel free to change these around as you see fit. Minutes for longer term trend, 720. I left this at 60 for minutes to measure trend. And these are kind of important. Just remember, minutes to measure trend is 60 for later on in the video, and we'll get down to it. Didn't change much here. I recommend changing if your bot continually goes into sell only mode. This is one of the settings that is probably getting triggered. And if your bot consecutively buys 8 times or consecutively sells 8 times, it's going to go into sell only mode, and it's kind of a protection from you, so you're not buying a ton of times in a huge dip. And then all of a sudden, or a huge rise in price on Bitcoin or whatever it is. And it's there to protect you from, you know, continually buying and then all of a sudden ending up with a ton of bags, or continually selling, when maybe your bot should be doing something different, right? So just kind of keep an eye on that. I'm going to move this to the side here. Let's see. So this is one of the main things I changed, and this was a request from one of the guys in my Discord. And I thought this was a pretty good idea, and we'll kind of talk about this in a second, but these are in seconds. So this is measuring the Bollinger Bands based on a 1 hour candle. And so I actually did some testing around in TradingView, and I kind of like this. So we'll talk about this in a bit in TradingView, but all of this pretty much stayed the same. If you're interested in learning how MACD works, I've gotten a few comments about that. Check out my MACD video. I do a pretty in-depth TradingView tutorial on how MACD works. And I actually don't use it in my settings quite yet, and I'll probably test around with using MACD as well. And I'll probably also test around with the stochastic candle periods, or the RSI, the stochastic RSI. So, you know, keep those in mind if you are interested in how those work. I have videos on them on my channel. For the time being, I'm not using them, just FYI. So let's go down to defaults. Pretty much all of this is the same, and this is kind of where we get into some of the juicy stuff, and this is kind of important. So I'm going to pull up this. Where did it go? That's the real question. Let me pull up this pages, because this is important. I don't know what I did. There it is. Okay, so basically you're seeing here the initial cost percentage is at 2%. And this is something that I really try and keep an eye on, especially with my DCA levels. So depending on how much balance you have, and I'm going to use this as an example, you really want to hone in your DCA levels and your DCA buying percentages down here, to a good percentage, because you don't want to overextend yourself. You don't want to DCA on all of your pairs and be overextended by 5 or 10%. And what I mean by that is, we can use this example. So say you start with 1 Bitcoin, and Bitcoin is valued at 10 grand right now. Your buy value is 2%, which is roughly $200, right? Based on these that we were just looking at. Say you have a max pairs of 10, and you have a keep balance of 0, and you have a DCA keep balance of 0. This is basically saying that if all 10 of your pairs go, take a nosedive and you go into DCA every single time, each pair will DCA 3 times, then you need to understand that, you're basically, when every pair is DCA'd the max number of times, you're spending $7,740. So that is 77.4% of your portfolio value right there. And you're left over with $2,260 in your account balance. And that's great. That's fine. But that's kind of what I aim to shoot for, is about 20 to 25% left over after my bot has DCA'd all the way down. And this doesn't happen all too often. Okay. So just, be aware of that, but it can happen. And so this ensures that I won't get overextended and I won't have to worry about my DCAs. I don't have enough Bitcoin left to then DCA all of my coins. And I think a lot of people are getting in trouble this way because the settings only work if you're able to utilize every DCA level and utilize everything that we have set up in here, right? So just be aware of that situation and we'll move on. So I changed the EMA gain buy value to negative 0.85. I believe it's at -8, so I didn't change that all too much. Changed the RSI to 37. I believe I lowered that just a bit. Not too much changed in here, and you guys can download these and kind of play around with them as you see fit. Loss percentage. Basically what this loss is, I get a lot of questions on the DCA buy strategy of loss. This is just saying that if the coin has to have lost 1.5% of its value over the past 24 hours. So it's nothing too difficult. It's nothing too tricky to understand. That's just one of the triggers that has to be true in order for my DCA to buy. And I have 3 DCA buying triggers, right? Because I want to make sure that if I'm going to DCA, I'm going to be in a good buying opportunity for this coin to make a rebound. So that's kind of my thoughts on that. Here we have my DCA buy triggers, -3, -3.5, -4. Now, what I would do is if I'm using a stop loss, this is what I would do. And this is what I normally do when I'm using a stop loss. I will add a 4th DCA and I will usually turn these. I will also do the same thing here. So this would be, I usually stop at 4. So this would be like, it would look something like this. And I would DCA very, very close to one another. And this is generally how I do it. -1, -1.5, -2, and -3, generally speaking. And I will have a DCA stop loss set up at -4%. So basically I have 3 or 4, generally 4 DCA buy times. And by the time you're out of these, you've DCA'd 4 times, you're generally, depending on how you set up these percentages, more or less, you're at roughly a -2 to 3% drop in your coin value. So you still have another 1 to 2% drop. I usually set up my stop loss, and this is not the code for it, but I would generally set this to -4. And this is not the correct code. I'd have to go in and just be sure what the correct code is, but I would generally set it at -4. And basically what this is doing, once you're done with these DCAs all 4 times, your bag value is going to be roughly 1 to 2% negative. So this would be -1 to -2%. And that would leave you with a decent opportunity to get out of this bag before you ultimately take that DCA loss. And once again, what I like to do is I like to make sure that my DCA buying times and my percentages of how much I'm buying on each level coincide with not overextending myself. Okay, so it's very important. That's something that I do on every time I change my DCAs. I make sure, and I can't necessarily do that for everybody. So when I give out these settings, it's not the same for all of you guys. So I recommend doing this yourself and running the numbers and getting the negative percentages that you want it to be at. And then decide the stop loss that you want to use. You know, how much are you comfortable, cutting off of your bag before moving on to another pair, right? So that's kind of important. This is kind of why I'm bringing this all up. Okay, so now that we've kind of messed around with these and you guys are aware of how to not necessarily overextend yourself, we're going to jump into the market conditions because most of this stayed the same up top. But basically I added a couple things down here. So the max top coin average change, what I'm going to do is go into the wiki so we can get an idea of what all this stuff means. So basically, the max top coin average change is saying that if the maximum change of the top coins from your configured exchange is less than this max, so we have -3. So for example, if the max top coin average change comes out to -5, then we're in the bear market. And so I'm using that one, which is good. And these are all treated as an OR. So if you have a bunch of these here, like I have here, the first one that's true will be true. Okay. So if they're all true, that's fine. If only one of them's true, that's fine too. You're going to end up in the bear folder. So what I'm using here is the max base coin price change, which is this one. This is saying that if the minimum change of your coin, of your base coin, so either Ethereum, Bitcoin, against USDT is more than this minimum of 2%, then, okay, so I'm reading the minimum one, just FYI, I'm kind of doing this out of order. So this is this one. So for our example, we have 4. So say, for example, this comes out to 5%, then we're in this market condition. And the reason I'm using this min base coin price change is if Bitcoin rises, and this is all being measured based on the minutes to measure trend from the top, which is the one I told everybody to remember. And that's 60 minutes. So in 60 minutes, if Bitcoin launches up more than 4%, I think it's safe to say that we should be in a bear market for our purposes. It doesn't necessarily mean that the entire market is in a bear market, but it means that altcoins will probably tend to bleed a little bit because we've all seen this situation in the past. So this is kind of protecting us from, Bitcoin launching up too fast. And then this is doing exactly the opposite. This is if Bitcoin drops by 3% or more, then we're also going to be going into this bear market. And basically that protects us on both ends from rising or falling. And you can go in and change these percentages to whatever you want, whatever you think is viable. And then if you don't like using the 1 hour candles, then you can go up to the top and change that minutes to measure trend from the default section. So just be aware. These are the overrides that I'm using in a bearish market. So I use the overrides just because I wanted to completely override a couple different things in here. You don't have to use overrides. You can use offsets as well. So just be aware of that. I know it's a little bit clunky and there's more information here, but I just like to use the override. So it's just plain and simple. I have a max profit set up, and I get a lot of questions about this max profit down here and up in this region, wherever it is, max profit here. So I actually increased it a bit, but the reason that I leave this max profit in here is due to the fact that you have a couple sell strategies. So the coin could rise by 3%, but the RSI may still be below 40. And what that's going to do is it's going to make, you're never going to sell that coin. And so my thought is if I get to a certain level of profit, I'm okay with just taking the sale. Because if it pumps up real quick to 3 or 4% and it only stays there an hour before dropping back down, you may never actually sell that coin due to your selling strategies. And that's kind of the difference between Profit Trailer version 2 and Profit Trailer version 1 is you really have to take into account the multiple buying strategies system that we're using now. So that's why I use this max profit, because I'm okay taking a profit. Any profit percentage is fine with me. But I actually did increase it just a bit because I was seeing results and it was kind of getting capped. So I did change that. And then I left this the same. I believe it was 1.1 before, but that's okay. In a bear market, I'm okay with that. So change this how you see fit. In this bear market, I use 4 DCA levels, and disclaimer, I actually do use a stop loss for most of my profit trailer trading. Coming from more of a trading background, I live by the stop loss on my manual trading. So, Definitely incorporating a stop loss, in my opinion, is probably a good idea. If you don't mind holding on to bags, if you're only trading really quality pairs, then, maybe a stop loss isn't the right thing and you're okay holding it for a while. But if you're, doing this like a day trading sort of deal, then, I actually enjoy a stop loss. The reason I don't include it in my settings is if I do put in a stop loss here and I don't comment it out or I don't let people know, then it will instantly sell all of your bags at a huge loss. And I don't want that for anybody. So if you want to set up a stop loss, by all means do it. Join the Discord, ask questions if you need help. But, I'm not going to include them in settings. I'm just going to talk about them. So I hope I touched on that enough. Let's see. So the boring market, I changed these percentages to this one's at 1. Anything between 1 and -3 is going to be considered a bear market or a boring market. Anything between 1 and 3, or actually anything above 3% is a bull market. So I changed the buy value to -0.75. I changed the RSI, the B buy value a little bit, not much. And then this is where I made some changes too. So this is the new config I'm using down here. I'm using the new coin grouping. So if a coin is on the market for less than 5 days, I don't want my bot to be purchasing this coin. My price trend change grouping. So we can go down to the pairs groupings and we can just explain what all of these are. So price grouping. So basically if the price is lower than this maximum, then these offsets will apply. In the case above anything lower than 0.001, this is for max price. Where it is? Here it is. Sorry, I just rambled on about something that's not even related. So max price trend percentage change, and that's what we're using here. We have ours set to -7.5, and basically if the price change for a coin is less than this maximum over the period defined in the corresponding minutes to measure trend, which for us is 60, then the offsets defined will apply. And basically this is the price at the end of the time window subtracted from the price at the start of the time window. So more or less, if a coin over the past 60 minutes drops by 7.5%, I want to offset my buying value for both my A buy value and my B buy value. So because I feel if a coin is dropping that significantly, I want my bot to start trailing it because the end has to be in sight at around -7.5 in 1 hour. And that's not always the case. We could just see a perpetual downtrend. So you could change this to increase your buy value so you don't get stuck in sort of a perpetual downtrend. But for me, if it ends up in this situation, I'm okay with testing the waters and kind of trying to find a good spot to buy. And that will also depend on your trailing buy values because it's not just going to instantly buy. Your trailing buy will try to time the bottom as best as it can. So keep that in mind. All right. So the next thing we're going to get into is the downside volatility grouping and the upside volatility grouping. And these are a bit more difficult to wrap your head around. So try and stick with me. In my last video, I explained these a little bit, but I think I made a mistake. I had a couple conversations in the comments section of my last video, and we had a bit of a back and forth kind of trying to understand how this works. And since this is a less than function, I think I had it wrong in my last video. So I'm going to kind of go over the downside volatility is a little easier to understand, and it kind of coincides a little bit more with the graph in TradingView. So I'll try and go over that as best I can to give a little more clarity. But once we're done with this, these are the last of the settings, and that's about it. So, let's get into it. So the downside volatility is measured as the average change as a percentage between the open and the low of the 5-minute candles over a period defined in the corresponding minutes to measure trend. So that's our 60-minute measure to trend. Ours is set to 60. In this example, if it's less than 0.1, then these offsets below will apply. So what I'll do is I'll go into TradingView and I'll kind of describe what is going on. So I'm going to bring back up the downside volatility, and that's this red line here. So as you can see, what the downside volatility is kind of telling us is this right here is a pretty significant drop in price action by negative 3.17%. So as you can see here, the downside volatility is just kind of hovering around 0.14, 13, 12. And as it dips a little bit, and then it kind of skyrockets up. So basically what it's doing is it's taking the average of these candles, and it's deciding, is the upside volatility high or is the downside volatility high? And basically in this situation, the downside volatility starts to increase up to about a high of 0.580. And you can see that what is happening here is as this gets higher, that means that there's been a larger and larger decrease in price action. And so basically my thought is when the downside volatility is relatively low, which in my example, I'm going to use 0.1. If the downside volatility is low, then you should sort of be expecting a bit of a correction because there hasn't been very many, red candles as of late. So my thought is if it goes below 0.1, then I want to lower my, offset my buy value by positive 50%. I want to make it tougher to buy when this downside volatility is lower than 0.1%, because that means that, we haven't had a ton of red candles yet. And so it's probably going to happen. And if you look at the past results, pretty much every time it dips below 0.1, it tends to skyrocket up and we have a big decrease in price action. So that's kind of my thought. The same thing happened here. Sort of same thing happened in this situation. And in here, it sort of starts to rise. So that's my outlook on the downside. On the upside, it's a bit more difficult. The upside volatility is measured as the average change as a percentage between the open and the high of the 5-minute candles over a period defined in the corresponding minutes to measure trend. So if this is less than 0.1, then these offsets apply. So it's the same thing, but using the high instead of the low. And, this makes it a little more difficult. So what I can do is get rid of this downside and I'll open up the upside one. But as you can see, it doesn't necessarily correspond as well with the chart. And in some cases it does. So right in this region, you're seeing a nice rise of about 0.2 or 2.45%. And you definitely see this upside volatility being pretty high. And this is sitting at about the one. Let's see. Yeah, it's sitting at like 1 right here. So basically, when this gets high, when the upside volatility gets high, I'm of the opinion that it's a worse buying opportunity because you've already had a ton of green candles and you should probably look to, be careful. Be careful when getting into a buy, especially after a 2.45 or 2.5% gain. Obviously the upside volatility starts to decrease here and we do see some red candles. So that's something to think about, right? And, it's still a less than function. So we need to kind of get an idea of, where is a good place to place our limit for our max change from open. And, what I was looking at this is I think, somewhere around the 0.2 mark is probably a decent area because you're seeing a lot of this, upside volatility start to really increase in these areas. And so the thing is I'm looking to buy at a lower upside volatility because that generally means that there's been more red candles than there have been green candles. And that's not necessarily the case, but that's kind of my outlook on it at the time. And it kind of coincides here. We have a low upside volatility in this region because the bigger candles in this area are the red candles. And that's just simply what's happening. And then you see this upside volatility kind of launch up in this region due to the fact of this giant green candle. These 2 candles in a row is like 2.6%. although you did see a nice downtrend here, which unfortunately was not the best situation, it was a negative 2%. That would be where we would be buying somewhere in there, or we'd be lowering our buying value. And that's what makes this upside volatility a little more difficult to gauge. It makes it a little more difficult to kind of predict versus the downside volatility. Because in my opinion, at a lower upside volatility, you sort of want to be, lowering your buying value. So that way it makes it easier to get a buy, but it also becomes a little more risky because it doesn't necessarily correspond immediately with price action. So I'm still trying to kind of grasp my head around how this, how I want to play this. But at the time being, I'm going to leave this at 0.2 because it seems to be when this 0.2 sort of breaches and it happens, you're definitely seeing a nice uptick in upside volatility, and you can probably gain some nice price action, as you can see in here. It's just this one is a lot more difficult, and I just wanted to kind of clarify, and I hope I kind of made a little bit of sense when talking about this. But if you're not in the Discord, jump in there. We're talking about this in there. We're talking about this and a bunch of other strategies, like I said, the bag busting strategy, all this other stuff that everybody's talking about. Hop in the Discord, and we'll do our best to kind of elaborate on a lot of these settings and kind of what we're doing to help protect ourselves from certain market situations. So with that said, please leave a like on this video, comment if you have questions, and I really appreciate all you loyal subscribers. You guys are awesome. So I'll catch you guys in the next one.